How will the new Apple products affect the share price, and what is a big underlying problem of the share of Apple? But first, I want to introduce you Eloy Sanchez.
Hi.
Eloy is in charge of the content with us, and he knows everything about products. And Eloy is a little bit younger than I am, so he's also more into the Apple product. Look, you show your watch. I have a model, but I have an old version, and you have also, I think, a newer edition of the iPhone, no?
Well, I'm hoping I'm buying the new one
Yeah,
when it comes out.
So first, we're going to talk about the new products and how it will affect the share price. And Eloy, you start with the new products. What was on the Wednesday, the 7th of September, the big Apple news?
So today, Thursday, well, we had it last night. We had a couple of products come out. First is the AirPods Pro, which, to be honest, they're pretty similar to the ones we had before.
They're also white.
They're white. They've got the same design, so not much new there. Then we had Apple Watches coming out, which we will talk a bit more in depth in right now. And also we had the new iPhone coming out. So we had the iPhone 14 and the iPhone 14 Pro.
Yeah.
So what's good to see here, what I think was really interesting, and what could affect all of us, was actually the pricing. So what we saw is that in the US they maintained the prices from last year to this year.
So no price increases.
No, the same
So
price.
the whole world is increasing all the prices, but not Apple.
Yeah, that's surprising, which it not only... So I think that's also something to take into consideration, because they did increase the prices in Europe. So pretty much in other countries the prices went up.
But not in the US.
Not in the US, but
Discrimination. I call it discrimination.
And what's even worse is that it's not only that they increased the prices, but the prices are already around 30% higher in Europe than in the US.
I think I told it a couple of times in the last week. I was in April in New York with my son, and I was at the Apple store, and I was doubting to buy or a new watch or a new phone. And when I landed in the airport of Amsterdam, I was checked. So I asked them, "What are you looking for?" And then the guy, he said, "Now we are looking mainly for iPhones, Apple Watches." I said, "No, I'm happy that I didn't buy one, because you have imported." So
yeah, well, I mean, in that case, yeah, it's not that great of an option. But at the same time, we're seeing that the difference in prices are quite significant. So there's different pricing depending on what country you are in Europe. But for example, between Spain and the US, we're seeing that the difference between the 14 Pro and in the US and Spain is 320 euros, which is almost
on a price of
1,000 euros.
Wow, yeah, so 30%. Wow,
32%.
Oh wow. Yeah.
370 in the Pro Max. So we're seeing quite a different prices. Then when it comes to the spec, we've seen some advances, but not too major advancement in neither of the products. The only product that did come out, which was a bit innovative, was the new Apple Watch Ultra.
Yeah.
So this is a product which they called made for exploration, adventure, and endurance.
Yeah.
So it's like a really rugged Apple Watch for deep diving, what we say, camping, and all this type of doing sports.
But I think I have this now for more than 4 years.
Yeah.
I did quite some extreme things with it, and it's still working.
Great, no?
Still, the bracelet is fantastic. So
Yeah.
it's more.
The good thing is it has now a 36-hour battery life,
Yeah, that's
which
the
is
problem.
quite
Yeah,
nice.
yeah.
Then they've got a dual frequency GPS, which you barely see in any products, and a thicker and bigger titanium case. So in that sense,
How did the market reacted on it when it came out during the news?
yeah, it went slightly down the stock, as it usually does. So after pretty much it's been the norm for the longest time. No?
Yeah.
So it did the same. However, it is true that although they did change the pricing in Europe, it is quite interesting that they didn't do that in the US, although all prices are going up. And at the same time, they're maintaining the margins they've been keeping for the last couple of years. So the margins are the same. We have to see what happens this year. But I think they're trying to bring value not only to the investors, but also to their clients, maintaining the prices, and also to the investors, maintaining the margin.
I think it's good for us as a customer, but the margin is under pressure then, because their cost price is probably higher than a year ago.
Yeah, I think the only thing we can find here is that they're somehow making enough pressure by who they are in order to keep their margins to the same level.
Yeah. And what do you think? Is this what the market expected? And do you think this will be enough? The first question: will this be enough for? Well, how will it affect the share price on a midterm, not a week, not a day, but on a couple of months?
We did see a big drop a couple of months ago from almost 180 to 155, where it is right now.
Yeah.
From my point of view, I think it might go up to the levels we had a couple of months ago, but we will have to wait and see.
Yeah.
But at the same time, you were talking about a big underlying problem in this stock.
It's a big underlying problem. I think it's what Apple does really well. So they have the day that they announce the new thing, so everybody's looking forward to it, and then the new is always a little bit disappointing because they make such a huss around it. So and they do it, and they are a smart company, so they know to increase. Also, they want to increase the watch for healthy reasons. They know. I think they can already introduce more health apps, but they do it slightly. So they know, okay, we don't give everything already to the public. So I think they have a lot of on the shelf. So the new products will be, what you said, it's a good increasement, but they have enough on the shelf to keep it increasing. So I think that's good. If you look at the share, which you said 180, that was the beginning of this year. It's now 155. And if you look at the market, if you look at the watch market, or I mean the phone market, it's a decline so far of 6.5%, and Apple is up 2.2%. So they do it relatively quite well this year. And if you look at the share price, 155 and $6 profit per share, that makes a price earnings of 25. That's okay. It's not too cheap. It's also not that expensive. It doesn't give me a strong signal. If you look at the last 3 years, then you see the revenues going up and the profits going up. So that's good and a good trend, fundamental-wise. But there is a problem. I will mention it later. And if you look at it from a technical perspective, Martin normally takes that for his part. If you look at the RSI, if it's an overbought or oversold share, and what you see, of course, when it's oversold, then normally the price of the share is low. So it is relatively low, with 155 against 180. But it doesn't give a strong signal also. And the MACD is a little bit stronger. But I think if you look at the chart, if you do one step back, I have it here in front of you, then it's a really important moment where it is now. So it's if you look at it from a physical, not from a physical, from a subjective point of view, then you see that it's an important point where it's trading now. Okay, but now the problem. I think a lot of people know is that Apple has a lot of cash.
Okay.
A lot of cash. A lot of cash. How much do you think they have?
I don't know. Go.
They had a lot of cash. They don't have that much cash anymore. If you see this chart, I think you will put it in the screen. No?
I will put it in the screen.
If you look at this chart, then you see, and this is from December 2019, they had over 100 billion of cash.
Wow.
Over the 100 billion of cash, 107 it was. And now, the latest report, so that was the Q2, so it was the end of June, it was only 48 billion.
Wow, that's less than half.
Half, yeah. So they're running out of cash. Is that because they do stupid things with it? No, that's not the case. But they are heading cash neutral, and that means that the company debt balance is the same as the cash position.
Okay.
And is that good or bad? No, that's not. I think they have a straight strategy in it. But what did they do with all those cash, especially in the last 10 years? They bought back shares.
Okay.
So they bought back shares in the last 10 years. Outstanding shares were 26 billion shares 10 years ago, and there are 16 billion shares outstanding. So they went down from 26 billion to 60 billion shares. And what does that what is that good for? For the existing shareholders, of course, because then the profit per share and the revenues per share, they go up. So the performance, especially on an share level, the profits per share, they went up. Mostly, maybe only because they bought back shares.
Yeah.
And because they're running out of shares, they can't buy back too many shares.
No.
They don't have enough money for it. So they have around now the existing pot of money they have, they can buy back around 4% of the outstanding shares. So that's much less. So you must realize, and also if you look at the last 4 years, 2018 until now, they spent 3 times, I have also a chart of it, 3 times more on buying back shares than on investing and dividends together.
Okay.
So that's a strategy, that's good, because that's for the existing shareholders. The last 10 years, the profit per share went up, so that's really good. But they can only do this for, I don't know what the speed they will do, so I can't say this is a year or 2 years, I can't say that, but for the moment they have only the cash in position for about to buy back 4% of the outstanding shares.
Wow.
So investors should realize so that the good years from a finance perspective, that's running out.
Yeah. That's happened to a lot of companies in the US,
Yeah.
from what I've heard, because the CEOs have had incentive to do it.
Yeah.
So they've been taking, I mean, if the share goes to this price,
Yeah.
then you get an incentive, and companies like GM have been doing that, the CEO, and getting profit. And now you're seeing that the same problem with Apple, they've run out of cash.
Yeah, it's running out of cash is negative, but it's their strategy. But you must realize it so that the buybacks are going sooner or later coming to an end.
Yeah.
So that's the increasing in profit per share that will be under a high pressure.
I understand.
So to summarize, I think again nice products. We will buy them. Huh?
For sure.
First we have to save some money, and then we're going to buy them. We have to sell a couple of Apple shares.
Maybe it's cheaper to go to the US and buy and come back.
No, you're not allowed.
Well,
you're not allowed. You're only allowed to do that. You're not allowed. No. So we think, and I think Eloy explained very well about the new products, and it will affect the share price. Can affect the share price in a good way, but there is an underlying, not a problem, but an underlying thing that you should know. Situation you should know if you invest in the Apple share.
Thank you.
Thank you for watching. See you next time.
Give us a thumbs up.
Oh, yeah.